Investing during war times. I look, man. I think we have one of two things that's going to happen here. I think we're going to a World War III is one of the two things. So this is option number one, where for some ungodly reason the United States decides to take on Russia. I don't understand because it's not just going to be Russia, China. I don't know if China will engage, but China's got its eyes on Taiwan. India is part of the BRICS, the Brazil, Russia, India, China. I think S is South Africa. So we know for a fact that India is not a fan of Pakistan. We also know India and China don't see eye to eye either, so that would be interesting. I don't know what to make. I don't know, but the facts are, if Germany and these other European countries start expropriating Russia assets and doing it more, taking out Russian ambassadors, this isn't to give Russia a free pass. I completely think that this is all one big scam from the global economic people, the global cabal. Anyway, long story short, war is a likelihood. I don't know what the probability. I don't have odds. I say yeah, you can see this going more and more towards a war. And if that happens, what do markets do? And I'm going to share with you some examples of what happened at the beginning of World War II. Yeah, you can't have energy. You can't have. You're going to fight. I mean, look, they have wars for salt, for heaven's sakes. You know what I'm saying? They have wars for everything under the sun. Some low-level anarchists killed a low-level prince in Sarajevo. Next thing you know, we're freaking fighting the Psalms. Crazy. But when there's no food, what do politicians want? They want to say it's not. Don't blame me. Don't blame me. Don't blame you. Don't blame me. We'll blame that guy behind the tree, and this guy would be Putin or Xi or whoever it is. It doesn't matter. It just matters that hey, we need to raise capital to fight war so we can basically keep our people fed and warm in the wintertime. All right, so I was looking at this article from the New York. So let's take a look. My man Daniel Coolbert at 55e.com or .co, 55e.co. This guy's bucket strategy thing here, and what we're going to see is these are the inflation data. Oops. So this is inflation data. We're going to start in 1940. This is the interest rates on the 30-day Treasury bill, and here's the S&P 500. So in 1940. The markets were down 9%, and in 1941, another 9%. Certainly not significant by any stretch of the imagination. That's an 18% decline. That's no big deal. But there's a lot going on in these years right here, within those years. And I want to kind of dive into that a little bit. Inflation was minimal, was still deflationary at the beginning of the end of the 30s. Climbed out of being deflationary, then it started hitting in pretty heavily, obviously, because the war machine was ramping up. A couple of years of low inflation. Then again, the rest of the decade after the end of the war was inflationary for sure. And then we had a deflation 49 to 54. We had 55. We had deflationary too. I remember that. I wasn't around, but I remember reading about that. Anyway, but we have interest rates again. The 30-day. This isn't the Fed funds rate, but it gives you a gauge. 30-day rates were zeros. I mean, look at that. I mean, the rest of the decade was zeros for the 30-day bonds. And the S&P 500 did great. It was down 18%, 40, 41, and 42. You could say that's when the things started to turn on in favor of the U.S., of the allies. Maybe. I don't know that to be true. I mean, we only began the war on December 7th of 1941, for heaven's sake. So don't tell me that the war is decided right here. It wasn't like the Civil War. I wonder how much of the Civil War is actually fake. You ever think about that? Does it actually make sense? When you think about does it make sense that continued on? All these people continue to throw their lives at the Yanks, knowing full well I don't know, something's odd about that. Anyway, but be that as may. So we had, look at that, 4 years, 2020, 20, 40. Then a negative year, you know what I'm saying? 4 years right there during the war. What the hell is that about? Rates were low. Inflation, moderated. It was high in these 2 years, but pretty moderated the next couple. Obviously, the last year is pretty high. So I want to read you this right here. This is along Wall Street. This is Dateline, September 1st, 1940. Today is the first anniversary of the European War. It was on September 1st, 39 that the Germans entered Poland. It was 2 days later that Great Britain and France declared war on Germany. Thus, were set in motion the world's strongest military forces, as Europe plunged again into an unknown uncertainty spread over the rest of the world, and no one could predict the ramifications. And yet, uncertainty spread over the rest of the world. 1939, up 3%. 1940, down 9%? Huh? I mean, let's see. After 12 months, with more and more countries becoming involved, this is still true. Uncertainty spread over the world. The Nazis are on the march. Almost everyone's involved. Now the United States is rearming feverishly, and Britain is fighting for her life, and yet we're only down 9% in 1940. The fortunes of battle in Europe have been reflected almost immediately in the stock market, with the public anticipating repetition of the World War I, they didn't call it that. Prices on the New York Stock Exchange began to soar. What? The boom, however, was short-lived. After the combined averages of the basic market reached a 2-year peak of 114, they fell. It lost its buoyancy, and the level has not been reached since. And it fell to, let's see, it fell, I can't remember what it said, something around here, right here. So right here. In May, when the Low Countries were invaded, the market suffered the worst breaks in September of 1931. Now, on June 10th, it became evident that the fall of Paris was imminent. The averages reached their lowest point for the year at 82. So it fell from 114 on September 13th of 1939 to 82 on June 10th of 1940. But at the end of closing today, though, they came back to 94. So it fell from 111, let's see, 114. Was it 114? What I saw? 114. And September 3rd, 114 minus 94 divided by 114. So it's down 17.5% over that time, that 1 year time frame. That's not a huge decline, man. It's just, I mean, the worst case scenario is fell from 114 to 82. 114 minus 82 divided by 114 fell 28% from right here, September 1st of 1939, September 13th, 1939 to June 10th. Then again, a lot back. All right, so let's keep reading here because I think it's pretty interesting. With the market now back to where it started at the outbreak of hostilities, many questions are unanswered. Will Great Britain be able to hold off the German invasion? And if not, what next? So much depends on that answer that purely domestic matters, although highly important, are accepted as generally being secondary. Let's see. So far, in 1940, there have been only 31 days in which trading, I was just talking about the volume, commodity markets, because of the turn that the war has taken the first year. Come here. The commodity markets have been affected more than the stock market, except those in agricultural products where prices are being controlled artificially. In fact, sugar, which had a spectacular rise in the First World War, is at a very low mark. I thought that was interesting. Two main factors account for different trends. One is reduced purchases by the UK because it's been virtually self-sufficient. Isn't that amazing? But check this out. The other factor is that the market of almost all Europe is closed to products of the US. Until the European markets again are open, no substantial price recovery in basic raw materials is likely. I don't know if that's a German siege, I don't know. Or just they didn't have I don't know what that's about. But all the markets were closed to the US, and yet sugar fell. But check this out. Here's wheat, the traditional war necessity, which heretofore has risen sharply in every important war, is selling at approximately the same price as a year ago. After a brief rise in September, the market for that grain has quieted down, and in June it became necessary to establish a minimum trade levels. With an estimated 1 billion bushels of surplus in Canada and the U.S. The governments of both countries have established various controls to prevent demoralization in the market. It could basically have a price control, essentially, a price floor. The situation is a far cry from the $3.50 a bushel level in 1917. Anyway, they talk about gold. All right, so now let's look at this right here. This is from 1941. The great shrinking stock market. I'm just going to show you something right quick. The volume of business last year is barely a quarter, this from 1941, of what it was in 1930. So thin in the market that the price of stock exchange seats, which are 600,000 in the boom years, has fallen to 30,000. the lowest level at the beginning of the century. And yet all that uncertainty. And look, it's only down 9.1%. I mean, it's crazy. And then the very next year is up. I mean, we had up years every year except 46, 53, 57. I mean, like, just that's during then the Vietnam years. We had negative. Here's 66. Here's 69. Here's 62. A couple negative years, obviously 72 and 73. But we're getting out of Vietnam. Anyway, the whole point is, even if war happens, does that mean the stock market is not a bad place to be? I don't know what to say. What in the future? We don't have enough statistical numbers. We don't have a sample size big enough to say yay or nay. But I don't see any. There's the TINA. There is no alternative. I mean, I guess you could say there's an alternative to getting smoked. It could happen, but it didn't happen in World War II. And I don't think I have. We only go back to 19. Do we go back? 1 second. Let's see. Pablo stuff. Let's see if we go back. We can make this go back. Yeah. See, let's go back to. It goes back to 1926. Okay. Never mind. So I thought it went back longer than that, but maybe not. Anyway, be it as it may. That is the closest to our reality right here, in my opinion. And the war machine got ramped up. The stock market did fine. So that could happen again here. I don't know. Or on the other hand, we could get a peace treaty because Russia's obviously got their Europe up against the barrel, and they could say, and then we revert back to arguing over stupid stuff like number of genders and climate change, and then that's got to be positive, right? Love your thoughts. We'll see you.